Hello everyone, this is Nitish and this is the Plums initiative, which is Prelims Level Up MCQ series. Here we discuss 5 MCQs daily and this will help you in your UPSC preparation. Today is episode number 186 and I am dealing with economics MCQ. Before starting this class, I would like you to please subscribe the channel and also like and comment on videos. These contents are free of cost, so for test series and foundation video, you can contact to Vysh sir on WhatsApp 7200 So let's begin. Today's MCQ number 1. The balance of payment includes both current account and capital account. Consider the following statement regarding this. Statement 1. The current account includes a nation's net trade in goods and services, its net earning on cross-border investment, and its net transfer payment. Statement 2. Capital account is included in calculation of national output while current account is not. So you have to identify the correct statement. One only, two only, both 1 and 2 and neither 1 nor 2. I will give you 10 seconds, try to answer this question. So its correct answer will be option number A, which means only statement number 1 is the correct statement. Now let's look at the explanation. The balance of payment divides transaction into two accounts, which we saw in the previous slide, that is current account and the capital account. The current account includes transactions in goods, services, investment income and current transfer. The capital account broadly defined includes transaction in financial instruments and central bank services. The current account is included in the calculation of national output while the capital account is not, which is the statement number 2. That's why statement number 2 is the incorrect one. Why? Because here it is written capital account is included. But in the solution part, we saw that it is the current account which is included in the calculation of national output, not the capital account. MCQ number 2. Consider the following statement regarding RBI's open market operations. OMO can be used to tame short-term inflation in the economy. They are to be mandatorily conducted once every year to adjust liquidity in the security market. No intermediaries such as commercial banks are involved in OMO, so you have to identify the correct statement. One only, 1 and 2, 2 and 3 and 1 and 3. I will provide you 10 seconds, try to answer this question. So its correct answer will be option number A, which means only statement number 1 is the correct statement regarding open market operation, that is OMO. OMO are conducted by RBI by way of sale or purchase of government security to adjust money supply condition. RBI carries out OMO through commercial bank and does not directly deal with the public. But here in the statement 3, we can see that no intermediaries such as commercial bank are involved in OMO. That's why the statement number 3 is the wrong statement. Why? Because commercial bank act as a intermediary between the RBI and the public. The central bank sells G-Secs to suck out liquidity from the system and buys back G-Secs to infuse liquidity in the system. These operations are often conducted on day-to-day basis in the manner that balances inflation while keeping bank continue to lend. The RBI uses OMO along with other monetary policy tools such as repo rate, cash reserve ratio, statutory liquidity ratio to adjust the quantum and the price of money in the system. When the RBI wants to increase the money supply in the economy, it purchases the government security from the market and it sells the government security to suck out liquidity from the system. So this information is important for the OMO. And here we can see that statement number 2 and statement 3 are the wrong one, because in statement number 2 they are mandatorily conducted once every year, but here we can see that it is conducted on day-to-day basis. That's why the statement number 2 is also wrong one. So our correct answer is A, which is statement number 1, which is the correct one regarding OMO. MCQ number 3. Consider the following statement regarding Financial Stability Board. The Financial Stability Board is an international body established by World Bank. It was established following the onset of 2008 global financial crisis. It monitors and makes recommendations about the global financial system. So you have to identify the correct statement. 1 and 2, 1 and 3, 2 and 3 and all of the above, that is 1, 2 and 3. I will provide you 10 seconds, try to answer this question. So its correct answer will be option number C, which means only statement number 2 and statement number 3 are the correct one. Now let's look at the explanation. Financial Stability Board is an international body that monitors and makes recommendations about the global financial system. It was established by G20 leaders. So here it is written World Bank. That's why the statement number 1 is the wrong one. And if we eliminate the statement number 1 from the options, we will get only option C, that is 2 and 3 are the right one. MCQ number 4. Consider the following statements. The evergreening of loan means bank try to revive a loan that is on the verge of default by granting further loans to the same borrower. RBI's surplus transfer or dividend to government constitutes tax revenue to the government. So you have to identify the correct statement. 1 only, 2 only, both 1 and 2, and neither 1 nor 2. So try to answer this question in 10 seconds. So its correct answer will be option number A, which means only statement number 1 is the correct. Evergreening of loan, you have to understand this term, that evergreening of loan is a term in which bank try to revive a loan that is on the verge of default by granting further loans to the same borrower. Dividends or surplus transfer from the RBI has become one of the biggest source of non-tax revenue for the center, but here it is written it constitutes tax revenue. That's why the statement number 2 is the wrong one and statement number 1 is the correct, because it is regarding evergreening of loans, which I already explained in the explanation part. Last MCQ of today's class. Which of the following factor can aid in the moderation of current account deficit in India? Rising workers' remittances to India, rising services export from India, abatement of selling pressure by foreign investors in Indian market, fall in commodity prices. So you have to select the correct answer code 1, 2 and 3, 1, 3 and 4, 2, 3 and 4 and all of the above. I will give you 10 seconds, try to answer this question. So its correct answer will be all of the above are the following factors that can aid in the moderation of current account deficit. So now let's look at the explanation. The moderation in CAD expected to be aided by fall in commodity prices, rising worker remittances and service exports, abatement of selling price by foreign investors is set to boost sentiments on the investor front, as it will also bring the pressure of the currency. So all the four factors contribute to the moderation of current account deficit. So that's all for today's class. Next episode will be tomorrow. Subscribe and stay tuned.